Troubled First Republic Bank is bought by JP Morgan Chase after FDIC takeover. The second biggest bank to fail in American history has now been acquired by the nation's largest bank, JP Morgan Chase. As we've been discussing on the channel, the central bank's agenda is to destroy the United States banking system by crushing small regional banks to consolidate and further centralize the U.S. banking network in order to try to gain more power and control over the financial system. So SVB and First Republic failures are just the start of a lengthy banking crisis, if you believe 800 years of history. A key feature of a systemic banking crisis is the length of time it takes to be resolved. Schmelzing told me that on average, the 57 prior banking crises, most analogous to the current one, lasted months, if not years. That's an ominous prospect, since the current crisis is less than 2 months old. As Schmelzing put it, it's far too early for investors to say that the crisis is over. Yes, more banking failures are on the horizon. I mean, we haven't even seen the tsunami of commercial real estate defaults that's going to leave a lot of regional banks holding the bag. And the Fed is behind it all. They created this crisis and are purposefully, systematically destroying the economy. Just this week, the Fed increases rates a quarter point and signals a potential end to hikes. Here's the deal. Even if the Fed paused interest rate hikes next time around in June, they've already gone too far. They can't avoid a crisis. A crisis is already taking place, and these types of crises do not happen all at once. They happen in waves. At the end of the day, one thing we've been hammering about on this channel for the past 2 years that people called us crazy about is now undoubtedly and abundantly clear. So clear, U.S. senators are finally starting to say it out loud in mainstream media on live TV. Check out John Kennedy, Senator of Louisiana.
How I feel about it. I just know the world is different now with technology and the way we can communicate so quickly. And banks exist on the basis of trust. They're really just, don't take this the wrong way, sophisticated Ponzi schemes. And they work when everybody trusts each other, and you get on that iPhone and start sending text messages, and you have the herd, panic and stampede. Anybody can go.
The speed of transmission is
It's breathtaking.
Senator Kennedy, thank you for being with us. Safe for you.
This is fun. And it's undoubtedly and abundantly clear that nobody trusts the banks now. Banks borrow short to lend long. They use deposits, which can be withdrawn at any time, to fund loans and buy bonds, which don't get repaid for a long time. Yeah, otherwise known as a sophisticated Ponzi scheme. Let's explore this and more together. Hello, I'm Crypto Casey, and welcome to another episode of Crypto This Week. Let's take a look at the global news stories and the state of the macro environment. Please be sure to check out our sponsors, NordVPN, 1inch, and Heatbit. Protect your data, privacy, and cryptocurrency investments by using virtual private network services with NordVPN that also ensure you can access decentralized exchanges to trade altcoins, like 1inch, a decentralized exchange with the best rates that easily allows us to buy any and all altcoins that exist on multiple networks, like Ethereum, Binance Chain, Arbitrum, Polygon, and more, that are not listed and supported on centralized exchanges, and passively invest in Bitcoin while warming and purifying the air in your home or office with Heatbit Mini, a space heater that is also an easy-to-use Bitcoin mining rig, which we can pre-order their latest model at a 60% discount using the link below. So scroll down and use links below to access the correct and official sites, as well as redeem any special offers they have for us. Sweet. Now let's discuss how banks are just sophisticated Ponzi schemes. When we deposit our hard-earned money, our property, into a bank, we are unknowingly giving a free, unbacked loan to a highly leveraged borrower, the bank. The bank gambles with our money until they lose, and then we, the taxpayers and customers, bail them out. How so? Well, check out the way government officials try to twist reality to make it seem like we aren't bailing all of the banks out. FDIC plans to hit big banks with fees to refill deposit insurance fund. Okay, first of all, where did all the money come from that was originally in the deposit insurance fund that now needs to be refilled? Well, they tell us point blank here on their website. The FDIC receives no congressional appropriations. It is funded by premiums that banks and savings associations pay for deposit insurance coverage. The FDIC insures trillions of dollars of deposits in U.S. banks and thrifts, deposits in virtually every bank and savings association in the country. Nice. The banks pay for it, not us. No, banks pass on all of their overhead, all of their expenses, all of their risk onto us. We, the taxpayers and their customers, gave them the money that was in the deposit insurance fund used to bail out SVB. And when the FDIC hits big banks with fees to refill that deposit insurance fund, they will pass on all of that onto us, the taxpayers and their customers. Here's the deal. We, the taxpayers, the people that the government is supposed to work for, the people that the banks are supposed to provide financial protections and services to, we are all going to bail out all of the banks, and we are on the hook to bail out the government as well. Unless, with all their creative genius and wisdom, the government tries to spin up some novel idea, like, I don't know, explore minting a $1 trillion platinum coin as a solution to impending debt default. As the United States stares down the barrel of a potential debt default, come June, a curious and intriguing solution has emerged, crafting a single $1 trillion platinum coin. The unusual tactic exploits a legal loophole that allows the Treasury Department to mint platinum coins of any value. By delivering such a coin to the U.S. Central Bank, the Treasury would create enough funds to settle its debts. Though this proposal might sound bizarre, it's gained traction as a potential escape route from the impending debt catastrophe. A $1 trillion platinum coin could save the U.S. from economic catastrophe in less than a month. It would be fast, legal, and no bigger than a regular coin. So it sounds like basically the U.S. government is thinking about creating an altcoin and assigning an arbitrary value to it that will instantly save the U.S. economy. Sam, I wish this was fake news and that all these headlines weren't actual headlines. I have no words. Luckily, Wall Street Silver sums it up nicely in this tweet. They are starting to talk about a magical $1 trillion platinum coin again. This is really end of empire type of economic strategy here. Why can't they rationally discuss reasonable budget cuts to get things under control? Ridiculous. So if we take a step back and take a look at the situation, where, as Senator Kitty pointed out, banks only work when people trust them, and now no one trusts them. Meanwhile, on Friday, bank stocks rebound hard from their sharp crash after the Fed meeting midweek. Look at this. This is a chart showing PacWest bank stock. These bank stock charts are on par with crypto charts when it comes to price volatility. What's going on? While people are scrambling to get their money out of banks, Wall Street is gambling, likely trying to cause a short squeeze. This is the lunacy of our current traditional financial system in the US, all of which is based on debt and the US dollar fiat currency, which, by the way, as we've discussed here on the channel, the word fiat means by arbitrary decree, which means the US dollar functions as a medium of exchange that the US government arbitrarily, by decree, declared must be used to buy and sell goods and services in the United States, and that it's only backed by the full faith and credit of the United States, which is basically on par with the amount of trust people have in banks right now, which is none. All of this in conjunction with all of the madness we've been covering together in the macro environment over the past few years is coming to a head, and the US dollar and traditional financial system will reset. And the only real solution to our global financial issues is neutral financial infrastructure like Bitcoin and other cryptocurrencies that use open, transparent, and mutable blockchain technology. As we explored last week, the writing is on the wall, and smart money knows it. Just this week, big financial merchant provider Stripe tweeted, "We're introducing a Stripe-hosted Fiat-to-Crypto on-ramp. No code required, and unlocking the waitlist for the embeddable on-ramp." And this tweet sums up the implications of this. Today, Stripe launched a crypto on-ramp. This is low-key a huge deal. I've spoken with several Fortune 500s who have fully built crypto strategies, but haven't launched yet because they don't have a trusted brand to handle the on-ramp and the wallet. Stripe just solved the on-ramp. See, the fact of the matter is politicians are greedy and want money. Wall Street and big financial institutions that pay them are greedy and want money. Crypto is a new digital asset class with a market cap so small because we are still so new that a face-melting amount of money is going to be made in this space. Most politicians will be pro-crypto in the end. An actual CBDC where all of their money is trackable, they won't like that one bit. Crypto is inevitable because we don't need banks and we don't need governments managing our money. They do not create any value. They do not do anything productive because money is digital now. We don't need them to move numbers around on their old, outdated dinosaur databases and infrastructure. We can send billions of dollars worth of Bitcoin and crypto anywhere around the world in just a few minutes for just a few dollars or cents. At the end of the day, banks are a useless, terrible middleman that gambles with our money, delays transactions, all while charging us for it, and then we have to bail them out when they lose a bet in their casino antics. So, in these crazy times, diversifying our wealth is more crucial than ever. stocks, bonds, real estate, gold, silver, Bitcoin, Ether, and also consider the unique, time-tested, uncorrelated asset class of fine art with Masterworks platform. Art is one of the oldest asset classes there are. In fact, Sotheby's is the oldest company on the New York Stock Exchange, nearly 275 years old. So people have been trading art for centuries. Typically, only the ultra-wealthy have had access to fine art investments until now. Masterworks removes the barriers we would otherwise face if we tried to invest in art on our own, because the costs are extremely high for the average investor. So, how it works is they take this very large asset class, which is roughly $1.7 trillion, and make it accessible to a wide range of investors with their platform that transforms physical art into share-based ownership. Masterworks uses their expertise to select and buy art that they believe to be investment-grade paintings. Then they file it with the SEC, similar to how a company goes public. And finally, they sell shares of the painting, which allows people like us to own fractions of pieces of fine art. So this is the first opportunity for anyone to invest in multi-million-dollar artworks, and Masterworks has become so popular, there is a waitlist to join. But if we use the link below, we can skip the waitlist and start diversifying our investment portfolios into this unique asset class today. So scroll down and check it out. Awesome. So if you would like to learn more about how Bitcoin works and why its revolutionary technology can help us maintain power over some of our wealth, check out this video. If you would like to finally have that eureka moment about how cryptocurrency wallets, seed phrases, and private keys work, check out this video. And to skip the Masterworks waitlist, click on the link on the screen. Like and subscribe for more. Be safe out there.